Hello my dear CMA inter students, welcome to our YouTube channel. Today we are going to revise the most important AS, that is AS 19 leases. This AS is very important for exam point of view, for financial accounting, right? Each and every exam, generally we have seen that you will get one questions for 7 mark, right? So you must watch this video before going to the exam. So let's start, my dear students. AS 19, accounting for leases. So what is lease, sir? Lease is an what agreement between the lessor and lessee, right? So lease is an agreement whereby the lessor convey to the lessee in return for a payment or series of payments the right to use the asset for agreed period, right? So lessor gives the right to use the asset to the lessee in a return of payment or series of payment, right? Next, sir, what is the scope of this AS 19? So this AS 19 is applicable to all the types of leases except the lease agreement to use natural resources such as oil, gas, timber, metals, then other mineral rights, then licensing agreement, that is motion picture film, video recording, plays, that is manuscript, then patent and copyright. Thereafter, lease agreement to use the land. In MCQ, they may ask the question from this. Lease is applicable to all the transaction except what? So this is very important. Next, there are two parties in the leases. Number one, lessor and lessee. Who is a lessor, sir? Lessor who gives the right to use the asset to a other person for a payment or series of payment. Then who is a lessee, sir? Lessee is a person who has right to use the asset for an agreed period, who has right to use the asset, right? Next, my dear student, there are two types of leases. One is finance lease and next one operating lease. So first one, sir, what is finance lease? So finance lease is a lease that transfer substantially all the risk and reward incidental to ownership of the asset. If the lease is going to transfer substantially, if it is going to transfer all the risk and reward incidental to the ownership of the asset, we call that lease as a finance lease. Other than that, we call as a operating lease. That is a lease is classified as operating lease if it does not transfer substantially all the risk and reward incidental to the ownership. We call that lease as a which lease, sir? Operating lease. Whether, point to remember, my dear student, whether lease is finance lease or operating lease depend on the substance of the transaction rather than its form, right? Substance over form. Legally, who is the owner of the assets, sir? Lessor. But substance, by substance, who is the owner becomes, sir? Lessee. So lessee will record the asset in his books, not a like lessee will record the asset in his book, not a lessor, my dear students, right? Okay. Next, my dear student, there are indicator. Now you may ask me, sir, how to identify whether the lease is the finance lease or operating lease? You told us that if substantially all the risk and reward are transferred, we call that lease as a finance lease. But what are the indicator? Indicator means through which we can understand it is a finance lease. So there are total 5 indicator and there are 3 suggestion, right? So indicator of finance lease is what, sir? If any one of the following indicator exists, we call that lease as a finance lease. Which are those indicators, sir? The lease transfer the ownership of the asset to the lessee by the end of lease term. That means if the lease is transferring the ownership of the asset to the lessee at the end of the lease term, we call that lease as a finance lease. Second indicator, the lessee has the option to purchase the asset at a reduced price that is lower than the fair value at the date the inception become what, sir? Exercisable, such that means lessee has the option to purchase the asset at the inception. He have that option that at the end of the lease term he should be able to purchase the asset at a reduced rate that is less than market price. Third condition, my dear student, the lease term cover the major part of the economic life of the asset, right? For example, if the life of the asset is 5 years and the lessee is using the asset for 4 years, it means the major economic life is covered by lease. So that lease become finance lease. Next, at the inception of the lease, the present value of minimum lease payment, right, amount to at least substantially all the fair value of the asset. That means at the inception, the present value of minimum lease payment should be equal to what, sir? Fair value of the lease asset. And fifth, my dear student, the leased asset is a specialized in nature such that only lessee can use it without major modification. That means the lease asset should be used by the lessee only. Other than lessee, no one can use without special modification. Right, my dear student, these are the 5 indicators to treat whether it is a finance lease or operating lease. Right, so there are suggestive conditions are there. There are 3 suggestive conditions, but this 3 suggestive condition is not that much important as the indicator. Indicator is very, very important, my dear student. Right, so what are the suggestive condition? If the lessee cancel the lease and if the lessor have borne some losses, if there is some losses on the cancellation, that losses has to be borne by whom, sir? Lessee, not a lessor. Next, if gain or loss from the fluctuation in the residual value also will be, if there is some gain or loss in the fluctuation in the residual value of the lease, it should be borne by whom, sir? Lessee. Next, my dear student, if the lessee can continue the lease for a secondary period for a rent which is substantially lower than the market rent. That means first asset have been leased, then after the lease period get end, again the lessee has taken the asset secondary rent, and that rent is less than what, sir? Market rent. We call that lease as a finance lease. Right, my dear students, so there are total 5 indicator and 3 suggestive condition. Again I repeat, these conditions are not important. What you need to remember, that 5 indicator. Right, next, my dear student, what is the accounting treatment of finance lease in the books of lessee? Right, so in the books of lessee, following is the accounting treatment. What is the accounting treatment, sir? First, the lessee should record the lease asset as a asset and corresponding liability. When he record the lease asset in his book, he should record that lease asset lower of present value of minimum lease payment or fair value of the asset. So he should record lower of what, sir? Fair value of the lease asset and present value of minimum lease payment. Whichever is lower, that he should record it. Now you may ask me, sir, what do you mean by present value of minimum lease payment? Right, so present value of minimum lease payment is nothing but, minimum lease payment means total lease rental plus guaranteed residual value standpoint of view of lessee. And if you take the present value of this, you will get a present value of minimum lease payment. That means, suppose the lessor has given the asset on lease for 4 years. So total 4 years lease rental plus if the lessee said that at the end of the lease term I will pay you 10,000, so that become your guaranteed residual value. Who has given that guarantee, sir? Lessee has given that guarantee, right? So minimum lease payment is equal to what, sir? Your total annual lease rental for a 4 year plus guaranteed residual value. If you apply the present value factor, you will get a present value of minimum lease payment or fair value of the asset. Fair value means what, sir? Market value of the asset. Whichever is lower, that amount will record, sir. Lessee will record in his books. When he record the asset in his books, what entry he will pass? He will pass the entry called asset account debit to lessor account, right, my dear? This is the accounting treatment in the books of lessee. But which rate of discount we should apply, sir, to calculate the present value? They said for present value to calculate it with discount rate equal to interest rate. Okay, so if the interest rate is not applicable, then you can use the incremental borrowing rate. In exam MCQ they may test this one. So interest rate or incremental borrowing rate, right, my dear students? So I hope you understood accounting treatment in the books of lessee in case of finance lease. So I repeat again, in case of finance lease means when lessor substantially transfer all the risk and reward associated to the lease asset, right? In the books of lessee, what is the accounting treatment, sir? So lessee will record the asset in his book lower of fair value of the asset or present value of minimum lease payment, right? So what is minimum lease payment? Minimum lease payment means total lease rental plus guaranteed residual value with standpoint of view lessee point of view. You should consider the guaranteed residual value, right? Next, after that, my dear student, what is residual value? So residual value of the lease asset is the estimated fair value of the asset at the end of the lease term. That means at the end of the lease term, suppose the lease term is 5 years, at the end of the 5th year, at what price the asset can be sold? That is called residual value, right? So residual value consists of two things: guaranteed residual value and unguaranteed residual value. So guaranteed residual value are those value which is guaranteed by the lessee. Unguaranteed means what's a third party, right? Okay, so guaranteed residual value we have discussed. Yes, my dear student, right? So unguaranteed residual value is nothing but what? Residual value is equal to guaranteed residual value plus unguaranteed residual value. So difference between residual value and guaranteed residual value, we get a unguaranteed residual value, right? Next, my dear student, accounting for finance in the books of lessor. What entry lessor will pass? How lessor will record the finance lease in his books of accounts, right? Okay, so lessor should recognize the asset given under the finance lease in its balance sheet as receivable at the amount equivalent to net investment, right? Like the lessor should record the asset at a net investment in the balance sheet asset side. So what is net investment, sir? So net investment is nothing but present value of gross investment. So now what is gross investment, sir? Gross investment means minimum lease payment plus unguaranteed residual value. So if you do the present value of this, you will get a net investment, right? So next, my dear student, what is minimum lease payment? You know very well what is minimum lease payment. Annual lease rental, that is total lease rental plus guaranteed residual value. But in the books of lessor, when you consider the guaranteed residual value, now you should consider with a standpoint of view of lessor, not with the lessee, right? Okay, after that unearned finance income. So what do you mean by unearned finance income, right? See, whenever lessor gives the asset on lease to lessee, definitely lessor needs some income from that lease. That is nothing but his finance income, interest income, right? So my dear student, how to calculate unearned finance income is nothing but your gross investment, right? In the gross investment minus the present value of the gross investment, right? So if you subtract the present value of the gross investment from the gross investment, you will get what? Income. That is time value of money, right? Okay, so in exam you may get one question from this for 7 marks, right? You must solve one question from this. So in most important questions I have given one of the questions, calculation of unearned finance income and the net investment in the books of lessor, and in the books of lessee also I have given one question to you, my dear students. Okay, right. Now, so I hope you understood. In case of finance lease, how lessee will record, how lessor will record, right? So in case of finance lease, lessee will record the asset lower of fair value of the asset or present value of minimum lease payment. In case in the books of lessor, lessor will record the asset in the balance sheet as a receivable, as the net investment. And what is net investment, sir? Is nothing but present value of gross investment. Then what is gross investment, sir? That is minimum lease payment plus unguaranteed residual value. Then what is minimum lease payment, sir? Total lease rental plus guaranteed residual value, right? Okay, so next, my dear student, next, that is point 2. Remember, unearned finance income is recognized over a lease term on a systematic and rational basis, right? Because the unearned finance income is the income of the lessor. So lessor should record that over a lease period or on a rational basis, whichever is more convenient for him. Okay, so what entry lessor will pass in his books, sir? First he will pass, when he purchase the asset, he will pass asset account debit to bank account, and this asset he will give at on a lease to the lessee. So that time he will pass the entry called lease receivable account debit to asset account. So this he has to record at which value, sir? At a net investment. At which investments are net investment, right, my dear student? I hope it is clear. Now we discuss what is operating lease, we discuss the accounting treatment of operating lease. Now we are going to discuss the operating lease and its accounting treatment, right? So we have discussed what is operating lease, sir. Are those lease which are not a finance lease, that is where the substantially all the risk and reward are not transferred. We call that lease as a operating lease. So what is the accounting treatment in the books of lessee, sir? Very, very beautiful. What is accounting treatment? The lease payment under the operating lease should be recognized as expense in the statement of profit and loss, right? Because it's an expense to whom? So it's an expense for the lessee. So we'll record the lease payment as an expense in the statement of profit and loss on a straight line basis or a lease term, unless another systematic basis is more appropriate, right? If you have any other way to record, you can record that way, otherwise you can record in a straight line basis. But always remember, in case of operating lease, lease rental, that is whatever lessee is paying to the lessor, there is an expense for the lessee, and it has to be recorded in the statement of profit and loss or a straight line basis of a lease period, or is some other option on a systematic basis. Next, my dear student, accounting treatment in the books of lessor. Then what is the accounting treatment in the books of lessor? Lessor should present an asset given under the operating lease as PPE in the balance sheet, because in case of operating lease, it is an asset of the lessor. So he is the owner of the asset. So the asset will be recorded by whom, sir? Lessor in his book as a PPE in the balance sheet, right? Lease income from the operating leases should be recognized in the statement of profit and loss on a straight line basis, because lease is an income for him, like whatever lessee pays to the lessor. Okay, next, now sir, who will charge the depreciation? Now please listen my dear student. In case of finance lease, depreciation will be charged by the lessee, not a lessor. But in case of operating lease, depreciation are charged by the lessor. Are you getting my point? Because in case of finance lease, lessor will not record the asset in his book as an asset. Who will record the asset in his book, sir? Lessee will record, and that's why we discuss substance over form. So lessee will charge the depreciation on the asset. But in case of operating lease, who will charge the depreciation, sir? Lessor will charge the depreciation, not a lessee. Right? Because who record the asset in the books of accounts, sir? Lessor will record the asset in his book, not a lessee. And that's why in case of operating lease, the lessor should record the depreciation. Right, my dear students? I hope it is clear to you. Next, my dear student, it is the last concept, that is sales and leaseback. What do you mean by sales and leaseback, sir? What is the meaning of sales and leaseback? Sales and leaseback is an agreement that one sell an asset for a cash and then lease it back from the buyer. That means, let's take an example. There are two person, right? There are two person, right? One is Ram, other one is a Sham, right? So Ram have sold the asset to whom, sir? Sham. And what happened? Again, he is the buyer, Sham is the buyer. From the Sham, again Ram is taking back the asset. We call that sales and lease back. Ram sold the asset, we call as sale, and again Ram has taken back the asset from Sham, we call as the lease back. Sale, and we have taken the asset on the lease, right? Then what is the accounting treatment for sale and lease back, sir? The accounting treatment of sales and lease back depend upon the classification of lease in the books of seller, right? Means lessee. Now, situation 1, where sales and lease back result into finance lease. If it is a finance lease, then the excess or deficiency of sales proceeds or the carrying amount should be deferred and amortized over the lease term in proportionate to depreciation. I repeat again, it's very simple, my dear student. Suppose it's a finance lease, then there is some excess amount or there is some deficiency with what's a sale proceed or the carrying amount, that has to be amortized over the depreciation, right? Or depreciation over the lease term in proportionate to the depreciation, right? Situation 2, where the lease and sales back result into operating lease, then what, sir? First, if the sale price is equal to fair value, the profit or loss should be recognized immediately. That means you have the carrying amount now. If there is any profit or loss, should be recognized immediately. Next, my dear, if the sales price is less than your fair value, then what? The profit or loss should be recognized immediately. However, if the loss is compensated by future lease payment, that is at a lower market price, it should be deferred and amortized in proportionate to the lease payment. And third, my dear student, that is sale price is more than your fair value, the excess over the fair value should be deferred and amortized over the period. Is that clear, my dear student? Right? So this is very important. These three things are very, very important from the exam point of view. Then operating lease, the fair value at the time of sales and leaseback transaction is less than the carrying amount of the asset, the loss equal to the amount of the difference between carrying amount and fair value should be recognized immediately. So this is not that much important for you. What is important? Up to these three, right? Is that clear, my dear student? I hope it is clear to everyone, right? So if you have any doubt in the lease accounting, you can message me in the comment section, right? I request everyone, please solve this sum based on leases. You please watch this video and after this please solve the sums on the basis of what, sir? Finance lease in the books of lessor and lessee. Operating lease is not that much important, but finance lease is very, very important in the books of lessor and in the books of lessee. Right, my dear students? So I hope you understood this. So I request everyone, please subscribe our YouTube channel for more updated video. Right? So okay, my dear student, it's time to say tata bye bye to everyone with a beautiful smile on your beautiful face. So do well, study well, see you, bye bye.